Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took on Friday, as well as the game plan going into tomorrow and this week, and what we're going to be looking for. So on Friday, it was a textbook day, very simple day. I mean, what were we trending on the weeklies on Friday? Bullish. Why? Because right here, this chart tells us everything. This tells us the higher time frame trend. If you guys don't know, the 30-minute chart on the Friday contracts tell you the main trend in the market. So when we look at the call side in this example, or in this case, the 525 calls, the 10's above the 50, 50's trending up. That means the market's bullish. So we're only focused on longs. You know, you don't want to be fighting the trend in a bullish market. And, you know, if you just flip to the put side, you can see there's nothing over here telling us anything on the put side. 10's below the 50. On the call side, you can see 10's above the 50. So that's just, you know, kind of a visual of what this looks like if you're completely new to trading these charts. But since the 30-minute chart is crossed, that means we're only focused on longs, and this is what we did on Friday. It's very simple. I mean, also before we even get in that, if we look at the other time frames, every other time frame was so bullish, like super bullish. 1 hour crossing, 50's curling up. 2 hours crossing, 50 curling up. Like, there's nothing about these charts that were anything close to bearish. So there was no chance I was shorting on Friday or Thursday, just with how bullish these charts looked. And, you know, it was just every chart super bullish. There's no 4-hour 50 on these charts. And then the daily, obviously, you know, there's nothing on the daily as well. If these are the right contracts, I think they're the right contracts, right? The 525s. Nope, I actually had the wrong. Okay, I had the wrong contracts. But, you know, same scenario. If we look here, same scenario. We got the 10 above the 50, 50's up hard, and then we got the 1 hour, same thing, crossing, curling up. 2 hours crossing, curling up. And then we do have a 4-hour 50 actually. So, you know, we do have a 4-hour 50. It's all the way up here at $12 a contract. So again, there's no resistance until we hit that 4-hour 50. And then on the daily, I'm not sure what we have. Yeah, there's really nothing on the daily. There's no daily 50. So really the only overhead resistance right now is this 4-hour 50. And tomorrow we're probably going to get new contracts maybe. I'm not sure what SPY is right now, but maybe we'll get like the 560s. I really have no idea what SPY closed out on Friday. But, you know, going into the week, market's bullish. We did have a nice trend for like 2 or 3 days. So we'll have to see how long this lasts. So this is how we capitalize on the move on Friday. Very simple. When we go to the 0DT chart, this is what we opened up at. So we ended up opening right here at 9:30, right here on this candle. Obviously, don't trade the first 15 minutes of the market. Just, you know, sit out, wait for price to settle a little bit, and then we could, you know, see what we look like. So, you know, this chart's really not telling us anything. So we end up opening below the 50 on the 0-day chart, and from there, all you have to do is wait for the calls to cross, and that didn't happen till later on in the morning/afternoon. But if we go to the put chart, you can see what we looked like over here. So right off of open, or not really right off open, about an hour in open, we end up coming down into this put 50 SMA. A lot of times when the market is, you know, trending bullish like this, and we come into the put 50, a lot of times that does mark a bottom. So if you want, you could try a position right there and just, you know, have a stop loss with a closure above the 50. But still, the best trade in this type of market is a 0-day cross on the call side. So if you really want to be, you know, looking for the best trade, wait for the call cross. If you want to toss some, you know, low risk longs on the table, this is a really good spot to do so in a bullish market, because a lot of times the puts doesn't cross, especially with how we looked on Friday. I mean, you know, in my opinion, you could have bought this because the 1 hour's crossing, 2 hours crossing, every chart was super bullish. So, you know, in my opinion, you could have bought that 50 or went long at the 50, and, you know, that ended up marking the bottom for the day. So when we go to the 0-day chart now, this is where you would have gotten the extremely high confidence entry. It was right here. This wasn't the cleanest cross in the world, though, I will say. The 50 was a little funky at times during this cross, but I ended up going long on this candle right here, the 1255. I'll send you the exact picture because I did post it in the Discord when I gave the alert out. But this is what the chart looked like. Yeah, I was directly on that candle. It was 2 minutes after. So this is what we looked like when I did go long. The 50 started to curl up, so I did go long right here. And also we have 3 minutes left, so most likely on the next candle that 50 is going to curl up as well. So, you know, we got a nice push on this candle, and then you could see, you know, ended up wicking to the 10 and then bouncing from it, and then the 50 curled up, and we got a, you know, very explosive move. I'm pretty sure this trade went 70 to 80 points. I forget what I actually trimmed for in here. Yeah, so 70 points I got, and then we had a nasty candle come out. I'm pretty sure there's another news candle. In this type of market, man, that we're in, you really have to have a limit order in place when you're taking your trades, because the last few few days, we have had these like random candles just spiking like 50 to like 80 points randomly. So you definitely got to have a manual stop loss in place, even if you're well in profit, because the market recently has been, just like I said, doing these weird candles where we get a crazy wick. So definitely would recommend having a stop in place, like especially like when you're in a trade. So you go long, let's say at my entry, just have like a 50-point stop just in case something happens, because if we do drop rapidly, you want to be like, you're not going to have enough time to react and get out of the trade. So having that stop loss in place, even if you're already in profit, just have something in place just so you don't get screwed. And thank God I did, because once obviously I'm up 70 points, I'm out most, and I have my runners trailing the 10, and from there I had my stop loss even, so I ended up getting on this dump right here, I got stopped at even, and then obviously we went lower, so that saved me a little bit. But definitely got to have a stop loss in place, like a limit order, or a mark order, whatever it is, whatever you want to call it, just a stop order, so you'll be out of that position if it we get that random candle. So yeah, that's what we took on Friday. This was a very clean trade. Again, the 50 was a little weird in this trade, I know, but honestly, I was just holding this because every single chart was super bullish. Like the higher time frames on the Fridays, like the 30-minute, 1 hour, 2 hour, all super bullish, all crossing, all had the 50 curling up. So I gave it time. I gave this trade a little bit of time for the 50 to work itself out, and it ended up paying off, and we got a good move out of it. So yeah, that's what we took on Friday. That was the only trade we gave out. And then on the rest of the day, we ended up coming here, breaking below the 50. Obviously, there's no trade here to take. This 50 dip right here, sketchy, because that 50's down. Wouldn't have been buying that. And then we did pop right back above it. You could have honestly bought this, but again, the 50 SMA on Friday was just a very weird looking chart, because you could see it curled up and then kind of like curled back down a little bit, and it just looked a little weird. But usually, once we get back above the 50, you're good to go back long, and you could have squeezed out some points on this if you did buy on the reclaim of the 50. Low risk entry right there. You got back above, we held the 50, and we got a nice pump out of it, and then right here gave us supreme entry to go long again. You guys know, when the market's trending, what do? You could buy this 50 dip right here. We don't have to wait for the reclaim of the 10 SMA before we get back in a position. So if we come down the 50, you could buy it if it's trending up like this, or if it's just flat. But back in this area, I mean, the 50 was trending down, so that was a not a good trade to take, because that 50 was down. And then we came down right here to the 50, could have bought that, and you could see it just gave like immediate bottom. We came down to wicked all the way up. You probably got like 40 to 60 points on that if you did buy it. And then we came down to it again, bounced from it again, so you honestly could have played that twice right there. Would not buy it for like a third time. Definitely wouldn't be buying that 3 times in a row. So I'd buy it once, buy it twice maybe, but 3 times I'd be packing up at that point, because really all you needed on Friday was this call cross. And if you wanted to try another position, either go right here at this reclaiming the 50, or buy the 50 dip right here. And you don't need to take every single trade the system gives. That's something some people don't really understand. Like, once you're up, you can just call it a day. Obviously, when we're trending like we have been the last couple of days, it's good to capitalize and take more trades and milk more out of the market. But especially when we're neutral, you do not want to be doing that. You want to be looking for one really, really good setup for the day, and then just calling it a day after that. Because when we're neutral, that's where a lot of people tend to struggle, because it's harder conditions. We don't move as clean. The crosses don't net as big of moves, and that's where we take our 50 points and just pack it up for the day. Like, I'm not leaving runners like how I did on Friday when I'm up 70 points. Like, if I was up 50 points in the neutral market on this cross, I'd be all out, because likely that's not going to continue, because there's no real trend in the market. So yeah, that's how you would have played Friday. It was a very simple day. You just play the cross right here. You could play the reclaim of the 50. Honestly, probably wouldn't have taken that though. I mean, just did not look like a clean 50 SMA. So honestly, best trade after that was that 50 dip, and we got it again right there. But I wouldn't buy it again. I mean, like 3 times at the 50. Obviously we're not getting that continuation off of it, so maybe it's likely to break, and it did. So that's how you would have played Friday. Going into tomorrow, we're going to get new contracts, but I'd imagine they look similar. I don't have the other ones pulled up. I'm not sure what we're going to get, because obviously overnight moves could change. But going into tomorrow, 30-minute chart tells us we're still bullish. All the other time frames are crossed, so we are still pretty bullish. The only thing of concern is this 4-hour 50. I'm not sure if we get new contracts what those are going to look like, but just be on the lookout for the 4-hour 50, because most likely that will provide a decent rejection. If I had to guess, I doubt it'll continue and blow past it, especially if it looks like this. You guys know the more slope down a 50 is on the higher time frames, the stronger of a resistance it is, or just in general, like any of the 50 SMAs. Like when we're below it and it's sloped down a lot, that means it'll be way stronger of an area versus if it was like just completely flat, going across like horizontal, like these like grid lines in the background. So that's just something to know if you guys are new with the system. If you have been trading it for a while, you guys already know that. So tomorrow, game plan: 0-day cross on calls, 50 dip on calls. If the market's still trending, most likely we will be unless there's a big move overnight. Watch out for the 30-minute 50 down here, because if we do drop and we hit this 50, that might be a really good spot to toss longs on the table, because look how it's the same thing as I just talked about with the 50. The more it's sloped down when we're under it, the stronger it is. When we're above it and it's sloped up like how it is now, it's the stronger area of support. So it's kind of just a flip of the resistance into support. Since it's trending up super hard, it's a very strong area of support. So if we come down to it, that could be a good spot to toss longs on the table. It'll just be situational though, because if the puts are crossing and we're at this 50, I'm not gonna buy this dip down here. I'm gonna wait for those puts to cross negative to go long. But maybe we'll get like a dip to the 50 and puts will be at the 0-day 50, and the 0-day 50 is gonna be trading down hard, and we wait for a rejection off of that to go long too. So that's pretty much the game plan for tomorrow. Obviously, if there's a big move overnight and we drop a lot and this chart loses the 50, then we're most likely gonna flip neutral and see some downside. In that case, we'll probably be playing a put cross or a 10 reclaim on puts, something like that. So yeah, that's all I got. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. It's where all the trades are shared, all the information in there on how to trade the system. If you want more in depth, we got tons of videos, tons of streams, tons of hours of content in there if you want to learn. So that's all I got. I'm out. Peace.